What's up, YouTube fam? Welcome back to the channel. As you can see, we got some life in the account today after receiving some heinous notifications yesterday that I'm going to put here on the screen. And yep, you guys can see I was assigned early on some of my shares. So if you're looking at my positions, you will see that I now have, let's see, here it is. 200 shares of IBIT, 200 shares of TQQQ, in which I have already sold calls against both. Now, I will say now does not seem like the most optimal time to sell calls, as obviously if TQQQ is bottoming along with IBIT, selling calls could be painful. Now, with that being said, when you own shares, it's a little different because since I own these shares and since they're assets I don't mind holding, if next week TQQQ does in fact rip up and IBIT or Bitcoin does in fact rip up to the moon, then I will have no problem rolling all the way out for literally as long as possible. Right, so the premise of this video is rolling, so I want to show you guys what I'm thinking with these current positions because I have obviously a lot of options still going to expire later today, and basically where my thought process is in terms of rolling all of these positions. So to be completely frank, I don't really necessarily see myself rolling the 53 or the 53 and a half, and the reason being is because if we go and look at roll this position, right, you'll see that we're at 53 and a half at $5.80. So right now we couldn't even get any lower to collect a credit if we wanted to go next week. If we go 2 weeks, then we still couldn't go lower, right? Because as you guys can see, or let's just remove that one. Okay, it's removed. All right. So anyway, if we go 2 weeks out, right, we still can't get any lower. And if we go 3 weeks out, then we can finally lower our cost basis by $50. So, to me, it gets to a certain point where, if we were to sell calls for those 3 weeks on these 300 shares, we would actually make more money and save ourselves more money than rolling. Why? Because let's just go and click on view all options and click sell call and go 7 days out. So let's just say we go even right here. That's $150 because remember, it's 300 shares. Obviously, we can go even lower, and this would be $270. So now keep in mind, every $100 is technically $1 in lowered cost basis, right? Because if you have 100 shares and you go from 50 to 49, you're lowering $1. So, if I was to make $270 next week, then that's lowering each by $1 because it's 300 shares. So it gets to a certain point where you actually have more to gain from just getting assigned and selling covered calls. And that's why the most important aspect of this strategy is an asset you trust, because when it does get to a point where you can't really roll, then you have no choice. Now with this, we have this $50 put that expires today. I do intend to roll it. Why? Because there's actual juice in rolling. So as you guys can see, we go out 7 days even, and I'm able to get at least $50 less, right? If I go 14, then I'll be able to get all the way down to 48 and a half, which is something I might consider. I might honestly, part of me wants to do it right now. The other part of me is like, today does look bullish, and as you guys can see right now, so, this could literally, I don't think it's going to expire above 50, but as long as it keeps going, it's going to give me more juice to actually roll to a better entry for next week. And that's what it comes down to, right? Is to roll like a pro, you want to be able to roll puts when the market's going up, and you want to roll calls when it's going down. So right now, I don't really have any calls that I need to roll, but if I did, I probably would have tried to roll them on this pullback because, that's kind of the best way to do it. We're not here to scalp entries and scalp trades, but what we are here to do is we're here to manage our positions accordingly and manage them effectively. So as you can see, look, we've already been able to gain. We're almost able to roll all the way down to 49 for next week. And by the time, it's still 11:30, you don't want to roll too late because, of course, early assignment. And obviously, I learned a very valuable lesson last night of, when your shares get super deep in the money, basically when your shares no longer have extrinsic value. Now, I'm not going to try to tell you guys how to calculate it. You could, Google that or use ChatGPT. It seems simple how to calculate extrinsic value, right? You just subtract the premium from the share price, and then whatever is left in the premium is extrinsic value. Again, it's it's easy to explain. It's hard to actually do. It's hard to wrap your head around. All I'll say is when you do go deep in the money, understand that you are at risk of early assignment. So when you go deep in the money and you're very close to expiration, right, similar to these positions that I have, right, like these TQQQ positions were like $86 strikes, which is why I'm down 2,000 on the shares. Now, again, I'm not really worried about it. Or is it the shares or here, let's see. Is this? Yeah, so I believe this is where we got assigned, right, on this $86 strike. Ultimately, you know, so it's 200 shares, 14,500 in total value, down 2 grand. Our cost basis is 83.30 after collecting the premium. Like I said, overall, I'm not worried about it. It's just a simple fact of, you know, you should be aware of early assignment risks, and especially if you are going to run a poor man's covered call, because early assignment is going to be a lot more painful when you don't actually have the shares to back it up. Now, you know, in terms of actually rolling, in terms of other strategies, you know, one other thing I have been considering is, of course, hedging with some sort of spreads. Now, as you guys can tell, I don't necessarily like to open spreads, but, you know, I've noticed that spreads complicate things for people, and sometimes what you really could do is just keep it simple, right? So obviously in this case, I have a 48.50 covered call that I sold, right? Let's just say I wanted to hedge against it. I could just buy a call for next week that would be like a little lower. So I guess I accidentally added this one to my watch list. But let's say hypothetically I buy the 47. Now let's just say it does end up shooting up. This call is going to gain value, so I'll be up on this. This will lose value, but since we have 200 shares backing it up, we can roll it out a month, 2 months, however long we need. So the moral of the story is when you sell covered calls, yes, you do want the market to fall, but at the same time you don't, because in the end of the day, you still have 200 shares of that stock. So if you want to be extra protective, you can always buy a call against it. Now, you could also always buy a put against it, right? Let's just say you have covered calls, you want to be below 48.50. Now you can buy a put, you know, at 51 or whatever. And that's not something I would really do. If anything, if I was going to buy puts, I would probably buy them against selling puts, right? Because hypothetically, let's say you buy the 51 put and then you sell the 46 put, right? At that point, let's just say it shoots down and it expires at 46.50. You know, you could be in, because think about if you buy the 51 put, your break even is 47.90. If it expires at 46.50, you know, now you're going to make money on this and this. Now let's just say it expires below 46. You can roll this put lower to 44, close this one for a win. Now, again, this is where it gets complicated, and this is why I don't discuss spreads too much on this channel. Instead, I take it position by position. So, you know, if you went into Robinhood and you click Builder, you know, they have all of these spreads, and that's exactly what we just discussed. But for me, I'd rather just take it position by position, because when you start throwing in terms, right, that's where people get confused. Like, for instance, this poor man's covered call, right? Now I'm obviously selling this call against it, but since I'm also selling puts against TQQQ, wherever they are, you know, it becomes a strangle, right? So, you know, when it comes down to option selling, you start to realize that it is all art, right? It's all, you know, my account, I'm managing it how I want it, how I want to, right? If anything, the only regret I have against, you know, the way I'm managing my account is just not keeping more cash. That's always been an issue of mine, which is what led me to option selling in the first place, right? Because I've always felt my most pain when I watch the market go up without me. So I've never been good at keeping cash. I've never been good. You know, even this $2,800 buying power, you better believe it is not easy for me to keep it in cash. So, you know, that's what got me into option selling. Was like, all right, I'm not good at keeping cash, so I need a system that's going to keep creating more cash for me and force me to have cash. Now, you know, if I was to say, what did I do wrong with this? Yes, I could have spread it out amongst more strikes, more expirations, or just kept more cash. But overall, I'm pretty content with the assets that I'm trading, right? Because I had a very large crypto portfolio, and I still do. Like, this still isn't my biggest portfolio. So to me, you know, yes, I'm technically down, but I don't care because, listen, I don't want to say I don't care, right? But what I'm trying to say is it doesn't faze me because, you know, my money was in crypto one way or the other, and it still is. So my other portfolios are still down. And that's the thing, right? This strategy isn't like, oh, we're going to make so much money when the market falls. But better yet, when you compare it to other strategies when the market falls, you know, you're not going to be as mad. Like right now, you know, let's click on IBITS. IBITS year to date, 12.15%. Our year to date is 9%. And that's with having a lot of money in a 3x leveraged asset. That's with some of the idiotic things that I've done, as you guys have probably seen on this channel over the last couple months. So in the end of the day, if I could outperform Bitcoin, that's all I can ask for, right? The S&P 500, when we are in a bull market, we should be able to outperform that very, very easily. Yes, in a bear market, we're going to probably lose more than the S&P. Why? Because we're literally trading a 3x version of the NASDAQ and crypto, or Bitcoin rather, two things that are much more volatile than the S&P. So it is what it is, right? Volatility is a gift. Volatility, it sucks when it's going down, it's against you. But at the same time, that's the beast that you're playing. That's the game you're playing. And that's what allows you to ultimately get big returns. So when it comes to rolling, it's not like it's just this walk in the park. Obviously, this put has continued to lose value as this video progressed. And I bet you now if we click and look at it, we can go all the way down to 49 for next week, which is something you want to see, right? Because now we're getting our cost basis down an extra $100 while not losing any money to do so. So that, again, is where selling puts gets extremely fun. And of course, when it's not as fun is when you have no choice but to get assigned. But even in this case, it's like I'm not so concerned. All right, I'm down $2,000. I'm down 12%. But now I have covered calls that are working for me. And it's like, all right, worst possible case, these covered calls get destroyed. I'll roll as far out as I possibly have to roll. Because at the end of the day, I don't mind holding TQQQ for months. So if I have to roll out, 35 days just to get my cost basis from 74 all the way to, 80, right? Without having to pay a debit, or in this, 80 without paying a debit, then so be it, right? I don't mind doing that on TQQQ. And that's also why I'm not going all in on one strike. I've seen someone comment, oh, you should just go all in on one strike. No, because that just gives yourself less flexibility, right? If anything, I should have been more diversified, right? I sold 3 of these, 2 of these, 4 of these. And if anything, my lack of diversification was worse. And ultimately, if you're going to go extra on any strike when you're selling puts and calls, make sure you're going further out of the money, because the volatility will get to you. And keep that in mind, right? When you're selling stocks and options with strong premiums, there's a reason. It's because there's volatility. And that volatility, whether it shoots up or down, it's going to create some headaches, some issues, and some things that you have to deal with. Obviously, as a put seller, we'd rather it go up. And even as a call seller, because we still have the underlying shares, so overall our account is still going to increase in value. So that's how, I like to treat rolling. That's how I like to treat managing. Ultimately, whether it's strangles or spreads, I like to really take it one by one, So again, for this call that I sold, right, there's a thought process of mine that's like, you know what, maybe I should buy a call against it. And I thought about it earlier this morning, and honestly, looking at the chart, right, it would be doing decent, okay? But, I still have hundreds of shares backing up the calls, and I still have hundreds of shares that I'm most likely going to have by the end of today. So that's why I was like, you know what, I don't need to buy an extra call when I'm going to have potentially, 400, 600, 900 more shares. We'll see. I'm most likely going to 100% roll this $50 one and maybe 1 or 2 of these, but, for me, it's like these 52.50 and these 53.50, I'm going to have to roll them so far out to even get any juice. Again, it depends how the next couple hours go. If it keeps flying up, then maybe I'll be able to roll lower. But right now, where I'm headed mentally, it's going to make more sense to just get assigned. Again, with this $86 put, it's like, for us to even be able to get any lower, we're going to have to go at least, let's just say 35 days. And let's see. At that point, we'd be able to get all the way down to 84.50. So yeah, maybe I'll consider it. Maybe I won't. I don't know. But at the moment, right now, I'm just watching, right? We still have a few hours left before the week ends. And yeah, I will take it from there. So that's all for this video. If anything, I will probably be posting again, if not tomorrow or Sunday, Monday. So you guys will see exactly what I end up doing. But I hope you're doing okay. It's nice to have some green in the market. It's been a very, very long couple weeks. I hope you guys are, like I said, doing okay, enjoying this content, learning from it, using it to manage your portfolio better. Make sure to like, make sure to comment your thoughts, make sure to subscribe, and I will see you in the next one.